Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing the upcoming Eurozone PMIs and the potential reaction in the euro. So Rafi, Europe's vaccination drive is accelerating now after a bumpy start, and Eurozone countries are finally coming out of lockdown, which has likely led to a boost in economic activity. Do you think this will be reflected in the flash PMIs due out on Friday?
Well, Maria, that's certainly the forecast that we're going to see an upbeat set of PMIs. Now, since the autumn, when infections across Europe first started to re-escalate, it was pretty much the manufacturing sector that was driving the recovery, but that is changing now, and that is mainly down to, first of all, the lockdowns that we had over the winter months, and the pickup in the vaccination. So that is allowing European countries to relax their virus restrictions, and that is boosting, of course, the services PMI, which is where there's a more direct link between social distancing measures and services activity. So the PMI for services is expected to rise significantly in May. We did see the PMI rising above 50 in April for the first time since last August, and we should see the PMI rise, picking up to 52.3 in May. And so it is possible that we could see actually roaring growth in the Eurozone over the coming months, like in the US, if the vaccinations continue at the current pace. And this will also make it less likely that we will see future lockdowns. So we have seen pretty dramatic turnaround in the outlook for European economies in the past couple of months.
Okay. Now, Eurodollar hit 4.5-month highs this week. If we get a strong set of PMIs on Friday, are we looking at more positive momentum for the euro? And what's the longer-term outlook for the currency?
Well, we could definitely see the current rally being stretched further should the PMIs come in expectations or better. But beyond the PMI data, the euro's path will depend on the ECB. Now, we've seen bond yields soaring during May. The 10-year German Bund yield has hit the highest in 2 years. It's been in negative territory for some time, and it's pretty close to turning positive, which would be pretty significant. And these high yields come despite the ECB pledging to front load its bond purchases, in other words, accelerate its bond purchases. And the reason why yields are going up regardless of the ECB's actions is because there's been some mixed signals from the ECB, and that has left investors questioning the ECB's commitment to keeping yields low. So just as the ECB is on the one hand saying we're going to front load bond purchases, there's been some noise coming from the ECB that it could start planning its exit strategy from the pandemic stimulus as early as the June meeting. Now, if we do get confirmation of this at the June meeting, the euro rally could continue, say, further for beyond the summer months, especially if the Fed was to maintain its own dovish stance. So unless the ECB does change its stance on, being maybe perhaps a little bit impatient in terms of exiting its stimulus, and maybe reaffirm its commitment to front-loading its bond purchases, that of course would have a negative impact on the euro, but otherwise the euro will probably maintain its upward path.
Rafi, thanks so much. And thanks for joining us at xm.com.